What if I told you that for a few $100s, you could own a piece of companies like Apple and Amazon and Facebook, and some of the fastest growing companies that have returned huge amounts of value to their investors? Well, I would then be describing something called an exchange traded fund, or ETF. And in this video, I'm going to walk through what those are, the types of ETFs that you can purchase and invest in, and go through some of my personal favorites. This is one of the most exciting things to invest in, and I want to show you exactly why I think so. So stick around to the end, and we'll go through it all together. All right. Well, I'm very excited that you are back here watching yet another video from Joshua Talks Money. We're going to go through something that's super exciting to me, the ETF. An exchange traded fund is really just a fund of different types of assets put into one vehicle of which you can buy shares, and those shares trade in real time just like a stock on the stock market. So let's take it all the way back to 1993, and that's when the first ETF came onto the scene. This was the S&P 500 SPDR ETF, SPY, SPY as the ticker. And basically this was a new innovative type of fund that aimed to track the S&P 500 index while also trading in real time like a stock. And so a big difference between mutual funds and ETFs are mutual funds update their value and their price at the end of every day, where an ETF is fluctuating through the highs and lows of a trading session, just like any other stock. And that's pretty cool because you can get in and get out at different points during a trading day, and you don't have that control in a mutual fund. Another thing is mutual funds typically have higher fees, and often they have minimums to purchase, where ETFs, you can purchase a single share that's much more affordable, often under $100 in some cases. So let's talk about the types of ETFs you can invest in. The most popular perhaps are the index tracking ETFs. So those are things like QQQ, which tracks the NASDAQ 100, DIA, which tracks the Dow Jones. And to reiterate the whole idea of this index tracking, those are just measurements of baskets of companies and how they're performing day to day. You can't actually go buy the Dow Jones or go buy the S&P 500, but you can buy an ETF or mutual fund that tracks those measurements, right? For example, if you wanted to buy a single share of all the 30 companies that make up the Dow Jones, that's going to cost you almost $5,000. But thanks to ETFs, you can do the exact same thing for about $311 as I'm filming this video. Next up are sector-based ETFs. And what this really means is you are able to invest in a specific section of the economy that you think you'd like to have more exposure to. Maybe you think healthcare is going to be really important. You can actually invest in that sector. There's an ETF called VHT, and this is going to give you exposure to all these companies in that specific sector. And this exists for technology or real estate. There's all types of different sectors that you can buy an ETF, and you know that that is covered. Next up are commodity-based ETFs. These are things like tracking gold, tracking oil. Some of those different types of commodities, you can invest in companies around that space. There are also really innovative ETFs you can invest in, things focused on Bitcoin, or there's a really popular set of ETFs from a company called ARK Investments, and these track things like robotics and automation and cryptocurrency and all these really emerging innovative technologies, and they bundle all the companies in to a single basket. All right, so at this point you know me, and I like to avoid fees and expenses. A lot of companies may have very similar ETFs, so they'll have similar sector ETFs and of course similar index fund based ETFs, but the expenses aren't necessarily the same. If you take something like SPY, the S&P 500 index, and VOO, that's Vanguard's version of that, you'll see that these track almost identical, as they should. However, the VOO, the Vanguard fund, has a lower expense ratio, and that to me is something that's attractive and something I look for. All right, and a word of caution. So not all ETFs are made the same. Going back to our story of the first one showing up in the 90s, since then there's now over 2,000 ETFs that you can buy and trade. And so it's important to know that not all of those are going to be necessarily great investments. Look at the volume and the market cap. How much actual money is in this fund? Is this something reputable with millions of investors and billions of dollars under management? Or is it something much smaller, perhaps less credibility and less liquidity if you needed to get your money in or out quickly? Remember, past performance does not guarantee future success. And so maybe an ETF has just been on a winning streak and the price is skyrocketing, the returns are so great, you wish you got in sooner. Understand that there's always ebbs and flows to different funds in different parts of the market. And so keep that in mind. Just because there's a winner today doesn't mean it's going to be the same for you, and you have to factor that in. Okay, I'll leave you with 3 ETFs that I really like right now. Of course, this is from my previous video. VTI is where I have a lot of my money. That's the total index from Vanguard, and that gives me broad exposure to the full U.S. stock market. I also have VWO. This is Vanguard Emerging Markets ETF. And lastly, I'll mention yet again ARKQ. This is something I'm very bullish on. I think autonomous vehicles specifically, and then robotics are going to change our lives. It's already here. Mass adoption, I believe, will be coming very soon in the next few years. And I want to be a part of that even with a larger expense ratio. Cool. So I would love to know what ETFs you're investing in. Drop a comment for me. Let me know. If you have any questions, if there's anything you want to chat about, leave a comment below. I'll get back to you, and I'd love to help you any way that I can. Until next time, take care.